Hey guys, what's up? PipSnipers here, back for another update. We're going to be taking a look at PulseX today. And now we're going to dive into this full analysis here. And remember, whenever you come to your PulseX chart, whenever you come to your deck screener chart or trading view chart, click this hexagon at the bottom right, click logarithmic, and then click auto fit. And you guys can see here, let me just remove that there. You guys can see here that this is just a huge wedge like this. And you had some deviation below this wedge right here. And we are holding the 50% fib. You see how we came down to the 50 to 61.8% fib over here? And yesterday we saw a nice solid green candle. You can kind of consider this like a bullish engulfing. Now we would want to see how price reacts here going forward, because we not only bounced off the 50% fib, but we also are using this diagonal trend line as support that we've been using since 2023, the later half of 2023. So if we end up, let me just change the settings here on this fib. So if we end up going below the 70.2 to 78.6% fib right over here, then it's very likely that PulseX will come down and sweep these lows and do the bearish scenario that I outlined last week, where we actually have a bigger Wyckoff accumulation range. Otherwise, as long as the rest of the market can continue with its bullish momentum, especially the others chart, so the total altcoin market cap excluding the top 10, if that can stay consistent to the upside and have consistent bullish momentum, then this could be a minor correction before we have continuation. But as soon as you go below this 702.786 on the daily time frame, then it's going to do this scenario right here, where we sweep these lows like this, and then we pop off from there. Okay, so instead of taking a look at this like a wedge, we would instead take a look at it like just a Wyckoff accumulation range, right? And we still need to have one more sweep of the lows, right? Just one more slam down to these lows before we have continuation. So something like that, right? And regardless of which scenario we do, I think that we're going to see massive expansion to the upside, regardless of which scenario we do, because this is pure Wyckoff accumulation. This would be considered your selling climax. You have your automatic rally, your secondary test, your fail break, and then you have your creek down, your A, your B, and then your C for your secondary test in phase B, or your spring, and then we pop off to the upside. So definitely, if we do go below those intermediary levels that I was showing you guys, then we would be doing that bearish scenario. Otherwise, this bullish scenario shows us that we've already bottomed. Now, all I would want to see here going forward is just to move back up to the POC. Now, the POC is the point of control. It's where 70% or more of the volume is traded. You could take a fixed range volume profile tool from the top of the peak of the range down to current price, and the POC sits right there at 4024. So if we can get back above that level, then it's very likely this over here was the low, and we can consider this valid deviation below this blue diagonal trendline support that we've been using since August of 2023. Okay, and then if you get above the POC, then you'd be taking a look at these Fibonacci retracements right here. These higher ones found by taking a fib from the December highs. Okay, so we'd be taking a look at the 50% fib at 4033, and then the 61.8% fib up to the 78.6% fib. Even getting back above this POC, I would say, is sufficient enough to consider that this is the low. But as soon as you get back up to these retracements, then it's very likely that this was the low and we're going to see continuation higher, right? So that is the bullish scenario, and all we need to do to find the wave 5 targets is just take a fib from the peak of the range down to the low. And take a look at this on the linear scale. And we have a target sitting at 306, 3037, 3051, and 306. Okay, now these are the conservative targets that I want you guys to take profit at, not financial advice. We can definitely go above the 4.236. In that case, if we went above the 4.236, we'd be placing the fib the same way. The only difference is that we would look at the fibs based on log scale, and we'd be mainly targeting the inverse of the 70.2% fib, which is the 1.702, and then we can also take a look at the 1.786. Actually, we'll just take a look at the 1.786 and 1.618. Let's see over here. Yeah, that's sitting at 3088 and 2014, and that would actually just be a 1-to-1 extension of this accumulation range right here. So if we were to just flip this range on its head, we can see that it's right there. See, right up here. So that would be your last TP. And then definitely save some more coins for your moon bag. We can take a look at incentive token now. And there's a big possibility that incentive token has bottomed. If we go on the 3-day time frame and take a look at this on the logarithmic scale, we could say that this was your sweep of the accumulation range right over here. But in order to validate that this was the low, we would want to see a push back up further into the range. So at around $1.40, like around right here, if we can get a push back up above $1.40, $1.45, then it's very likely this was the low at the 70.2% fib. So taking a fib from the December low up to this March high, you guys can see how we came down to the 702, right? Okay, it came down to the 702, but there always is a possibility if Bitcoin sees a flush that incentive token will come down to the 786 and then bottom out and then bottom from there. Like it would just be a wick and then it would bottom out from there. Like I mentioned this in my previous videos actually. So usually the inflection points in the market, more specifically in crypto, it's the 702 and the 786. So let's say you come down to the 702, the market will likely see an incline from that 702. Now that will either be the bottom or this will just be a bull trap before we slam down to the 786 and then bottom out from there, taking out these highs and coming back to the bottom end of this low that was set before this retracement. So that's what I'm thinking here for incentive token. It's either that we've bottomed, but we need to see a little bit more of a push above $1.45, $1.50. Otherwise, we're going to come down to the 786 at 82 cents just a little bit, maybe as a wick, a manipulation wick, and then pop up from there. So let's go ahead, and for incentive token, we'd be taking a look at a $26 target, because that's simply the 70.2 to 78.6% fib from the last all-time high down to the low. Let's go ahead and take a look at PLS over here. So this is pure Wyckoff accumulation here. And this is our spring. This is my bias is that this is the low and we shouldn't go below this low if this is for sure the spring. So, I mean, if PLS went below that low, we would have to reevaluate. But this does look like Wyckoff accumulation here. And I like how we have a sweep of that low. So I'd want to see a move above, I'd want to see a move back above 403367. And we could do the same thing we did with PulseX, right? Just take a fib from this low over here. Sorry. Take a fib from this low right here up to this high. And you can see we're on the 38.2% fib. And we wouldn't want to see a move back below 4021 and 4019. Otherwise, we're going to come down to take out these lows at 4017. And in that case, we would have to reevaluate. But so far, this does look like a really nice deviation below this macro range low. And then we could see a move back up to the mean of the range, which would be sitting at 4068, and then get above the mean. Then it's likely we'll be reaching for this supply zone right here. You see this supply zone? We just be reaching for that level. Now, let's go ahead and take a look at HEX. So this is HEX on PulseChain. We'll go on the 3-day. And you can even see, just by taking a look at the linear chart, we don't even have to switch to the logarithmic on this one. Because the reason why we don't have to is because the supply and demand zone is so apparent, right? You can see that there is, every time we reach for these lows, every time we reach for these highs, the price bounces back and forth. So it looks like there's a concerted effort by market makers to accumulate this coin, right? Because they're selling up here at the supply and then buying up at the demand, a classic form of accumulation, right? This is your supply. And this is your demand. Very simple, right? This is where they're accumulating at. So now is the best time to accumulate HEX on PulseChain. And, you know, just DCA in. Don't worry about the dips. Not financial advice, of course. And this is a very risky coin. So for all those that are watching that aren't in this ecosystem already, then don't risk more than you can lose. But yeah, this is the 4-hour time frame over here. So we may still see chop at these lows. Let's go on the logarithmic scale. Let's go take a look at the retracements here. And like I was saying in the last live stream, if this level can hold, the 786 and the 886 retracement, at 2044 and 2055, then it's very likely that this is a wave 1, this is your wave 2. You may see chop around this region at our demand zone, like we were showing on the high time frame on the linear scale. Then you may see a move back up to this supply, likely see a little bit of a retrace, but it'll more likely than not be a successful attempt at a break, considering how much we've come up here. You see how many times we've come up to this supply zone? Once, twice, 3 times, 4, 5, right? So it wouldn't surprise me we come up here and then the 6th time we see the successful break above range. Something I also noticed on HEX is that when we take a look at the RSI on the 3-day, or we'll actually take a look at it on the weekly, we do have a little bit of hidden bullish divergence where we have a higher low, right? A slight higher low. And then an equal low on the weekly RSI. On the 3-day RSI, you have also an equal low. So this would actually be considered Class C bullish divergence. So it's not the strongest divergence, but it's still there. So like I said, the ecosystem is trying to find its footing here. Nothing to really worry about. I would say that now, considering now we're at the range lows of all 4 of the coins within the ecosystem, it would be a great time to accumulate. And just don't focus so much on the price. if you believe in this ecosystem, I would say don't focus so much on the price, but more so focus on stacking as much units as possible for the anticipation of a move back up to the supply zone and having range expansion. So now for this, for Hex on PulseChain, we would just take a fib from these highs down to this low, and then take a look at the linear scale targets, and we'd be taking a look at 12 to 13 cent. And that's likely not going to be the top, but instead a local top. So if we do, we may even overshoot it a bit to around 17 to 18 cent. So if we put a higher value on this, which is the 4.618, or sorry, 13 cent. Let me see here. If I add the 5.618, I usually don't add the 5.618 on charts unless it's like a lottery coin or like very explosive. So yeah, around there, 15 to 16 cent. And then we'd come down for a retrace. And now and then wherever this tops out at, you look to see wherever this bottoms out at. Then you take another fib, a regular fib, like a regular fib like this, from the high to the low, and just look at the next section of extensions for the fifth wave target. Now this fifth wave is not guaranteed. That's why you guys should really take profits all the way up as we break above this 3-year long range. Or sorry, is this 3 years? Let me see here. This is, no, sorry, almost 2 years, yeah. But yeah, this is the ecosystem, pretty bullish. If you guys have any questions, please feel free to let me know. Peace out, take it easy, see you in the next one.